Now let's get to our last topic of this chapter, the standards of professional conduct. Now, what are the standards of professional conduct? There are in total 7 standards. I will explain you each and every standard in detail in the next chapter. Here I'll just give you an overview. Again, I'll explain that codes are the ultimate goal and standards are the guidelines to achieve those goals. Like for an example, if you have to go from destination A to destination B, so destination B is your destination, right? It's your ultimate goal. You have to reach destination B. But the route that you follow from A to B, that route are the standards. Now you understand? The standards are the guidelines through which you can achieve your ultimate goals. Now there are total 7 standards laid out by the CFA institutes. They are very simple, very easy. Just I will give you a brief idea right here of each and every standard, the subsections of each standards, and then in detail we will cover it in the next chapter. Now you tell me, what are you? You are a professional. So the first standard is professionalism. Second, what do you think? Where do you work? Where do you work? You work in the capital market, so your second standard is the integrity of the capital market. Now, as you can see here, this word integrity, we have heard this word from the first chapter and we will hear this word throughout the syllabus of ethics. So, it's very simple to remember. What are you? You are a professional. And where do you work? You work in the capital market. So, we have to maintain the integrity of the capital market. Now you tell me, who do you work for? You work for your clients, you work for your employers. So the next 2 standards, the third standard is duties to our clients and the fourth standard is duties to employers. Now once we know that what are we, where do we work, who do we work for, the next thing we need to know is what do we do at our work, what is our job profile? Investment analysis, recommendations and actions. Exactly. So this is the 5th standard, investment analysis, recommendations and actions. Basically your job profile, the work that you will do after finishing your CFA is the 5th standard. Now whenever you are in any office or at your workplace, conflicts are bound to arise. So your 6th standard is conflict of interest. It's just my way of giving you a shortcut to remember what are the standards. Though it is not mandatory that you remember each and every standard's name and in sequence, but it definitely helps if you have the idea of what are the standards called. Now last but not the least, where do you learn what you are? You are a professional. Where do you learn to be a professional? In CFA Institute. So your roles and responsibilities as a CFA Institute members or candidate, this is your 7th standard. So I hope I've made it very simple to you. What are you? You are a professional. So the first standard is professionalism. Second, where do you work? You work in the capital market. So the second standard is integrity of the capital market. The third and fourth standards are duties to clients and duties to employers. How to remember this? For whom do you work? You work for your clients, you work for your employers. Next is, what do you do at your work? What is your job profile? Investment analysis, recommendations and actions. Last, in workspace, conflicts are bound to occur. So your 6th standard is conflict of interest. And last, where do you learn what you are? You are a professional. Where do you learn to be a professional? In CFA Institute. So the 7th standard is responsibilities as a CFA Institute member or candidate. Now let me give you a brief idea of each and every standard and the subsection. Now the first standard is professionalism and the first subsection inside it is knowledge of law. As the name suggests, it just asks you to have the knowledge of law in whichever country, in wherever your work is. For example, you work from India but you have your offices in Singapore, US, Australia. So you should have the basic understanding of the legal requirements of those countries, of the rules and regulations in that country. But you need not be an expert. Also, you need to not perform any illegal activities, and if anyone around you is performing any illegal activity, you should disassociate yourself from that particular surrounding. Basically, this is what the standard talks about, that you should have the basic understanding of the law wherever you are, wherever your work is, and you should not perform any illegal activity, as well as you should disassociate yourself from any illegal activities that is happening around you. Sorry. The second standard is independence and objectivity. In code of ethics also, in codes also, I told you that you need to be, your recommendations and actions need to be independent. But this standard tells you that how will you maintain your independence and objectivity. One of the few examples is you should not accept any kind of gifts or benefits from your clients. So if you receive any gifts from the clients, you're bound to become biased towards that client. You will be happy with that client, and maybe you will, the entire recommendation, analysis or your reports may not be completely independent, may not be completely objective. So this standard tells you how to be independent and how to be objective. The third standard subsection is misrepresentation. Knowingly, you must never misrepresent anything. Unknowingly, by mistake, things can happen, but you will have to prove that it was by mistake or unknowingly. But knowingly, you must not misrepresent anything. For example, you should not write any false report. That is a misrepresentation. The fourth standard is misconduct. Basically, don't do fraud. Don't get into any fraudulent activity or any deceitful activity. Always behave professionally. Always behave in a truthful manner so that people around you, the clients, everybody around you can trust you. So the first standard is very simple. It talks about professionalism, like how to be a professional. You should have the knowledge of law. Your all recommendations, your all work, you should be independent and objective. You must never misrepresent. You must never misconduct, get into any kind of misconduct. So now the second standard is integrity of the capital market. It has two subsections: material non-public information and market manipulation. Let's talk about the first subsection, that is material non-public information. If you remember, I have given an example of insider trading in the first chapter also, where you must not share any information that is confidential and that is material. It basically means if, for example, if company A and B are about to merge and it is their confidential matter, it is yet not known to anybody in the public, then you must not share this information to anybody, based on which their prices can fluctuate. We can call any information material only when it can fluctuate the price in the share market. It can actually fluctuate or hamper any company's reputation. Those are called material information, and non-public information are the confidential information which is not supposed to be known by other than few people. So you must never use such information for your own benefit or for your client's benefit, and you should never let also anybody else use this kind of information. The second subsection is market manipulation. This is a very small example of pump and dump. Now, few people, what they do, if they have a lot of money, they will find a penny stock in which they will invest a huge amount of money. They will buy a lot of shares. Now, this will obviously create a buzz in the market that this person has acquired so many shares in this penny stock. So, eventually, other people also start buying this. Now, because of this, what happened is the price of that particular penny stock has risen up in the market. And once the price has risen up, what you do is you dump the stock completely. And when you dump the stock completely, obviously the prices fall. This technique is known as pump and dump, where your any news or your any action has increased the price in the market of any stock not correctly enough, and then after the price has been increased, what you do is you sell all the stocks and you make the profit and get out of it, while the others, they suffer huge losses. This is a very common example of market manipulation. So you must never do any such act. You must never support anybody in doing such acts. So this talks about the integrity of the capital market, that is not sharing material non-public information and not getting into any activities which leads to market manipulation. The third standard is duties towards your clients. Like I have told you before also, clients comes first. So the first subsection talks about loyalty, prudence and care. You must be loyal towards your clients. You must advise them, you must recommend them anything with utmost care. You should not prefer any other client over your own client. This basically talks about loyalty, prudence and care. B is fair dealing. For you, all your clients should be equal. For you, all your recommendations should be fair and should be complete. This is what fair dealing is all about. Third is suitability. Every client has different requirements. Some wants to take a lot of risk. Some don't want to take a risk. You must always recommend any kind of investment as per their needs, as per the client's suitability. So, for example, a client does not want to promote tobacco industry, so he has advised you not to invest in the tobacco industry. So you will, while making a portfolio for your client or while investing his money, you will not include the tobacco industry in his particular portfolio. This is what suitability is. Fourth is performance presentation. So whenever by the end of the year or by the end of the quarter, however your client wants, you are presenting how you have performed. You are presenting to him what are the profits, what are the losses, what expectations have you met and what expectations you've not met. So this presentation must be in a very simple language, in a straightforward language, complete, true and fair. You should not misrepresent anything here. It should be absolutely complete. It should be completely inclusive of everything. This is what performance presentation is. And fifth is preservation of confidentiality. Obviously, your client's information are extremely confidential, but there are few exceptions to this. Like for example, if it is required by the law, you need to disclose few details about your client. Now, if your client is engaged in any illegal activity, you might have to disclose the client's personal or private information. So these are the few subsections that talks about your duties towards your clients: loyalty, prudence and care, fair dealing, suitability, performance presentation and preservation of confidentiality. The next standard is duties towards our employers. Like in duties to client, we read about loyalty. Here also the first subsection is loyalty towards your employers. You must always let your employers use the skill that you have. You must never cause any harm to your employers. You must always be loyal to your employers. The second is additional compensation arrangements. For example, having a job on site or doing anything or accepting any gift that might create a conflict with your employer. So in certain cases, in such situations, you must always disclose whatever conflict is there to all the parties involved. The third subsection is responsibilities of a supervisor. Now, if you are in a supervisory position, then it's not just your responsibility to take care of your own actions, but of your team as well. You should be aware of any wrongdoings or any misconduct that has been happening in your team, and you should be always aware of it, because if it comes to any kind of investigation, it will be assumed that you, being their supervisor, knew about it all the time. So these are the few subsections of the duties to employers. Moving on, the fifth standard is investment analysis, recommendations and actions. Now, whenever you make any investment analysis or recommendation or actions, you need to take care of these three subsections: diligence and reasonable basis. Your any investment analysis, your any investment recommendation should be a result of a thorough analysis. You should know what made you reach to a particular result, to a particular decision, and there has to be a complete explanation behind it. Like for example, if you want to write a report to buy a share, then you need to have a reasonable basis. Then you need to have a good analysis, a thorough analysis behind that decision. This standard talks about diligence and reasonable basis. Next subsection is communication with clients and prospective clients. Now, whenever you communicate with your clients, it needs to be in a simple, easy and complete language. Now, simple and easy is okay, but what is complete? complete means you cannot miss out on certain information just because you think it's not that important. Everything is important. Also, you should also make a difference about what is your opinion and what are the facts. Sometimes we say that we are of this opinion, but this is a fact. So while communicating with your clients and with your prospective clients, you should take care of these things. C is record retention. You must always keep the records of all your investment analysis and recommendations. Because if in future, suppose there is any kind of case against you, any kind of investigation against you, how will you prove that you are innocent? Because you've kept all the records all these years, you will be able to prove your innocence. That is why you must always keep the records. You must always maintain the records and update them as and when required. The next standard is conflict of interest. First subsection is disclosure of conflicts. It basically says that whenever you are in a conflicting position, you must disclose that conflict to all the concerned parties. For example, you hold shares of ABC Inc. and you will write a report for the same company. Now here there is a small conflict because people will think because you are a shareholder, you will be biased towards that company. But the standard requires you to just disclose this conflict in your report and to the company and to your employer, all the concerned parties. The second subsection is priority of transactions. As I have said before also, the topmost priority are your clients, then comes your employers, and then comes you, yourself. So whenever you have to buy a share, for example, for your employer and for your client, you will first buy it for your client, then you will buy it for your employer, and then you will buy it for yourself. C is referral fees. Now in case whenever you are receiving or giving any kind of referral fees, you need to disclose such receipt or payment to your client, to your prospective clients, and to your employers. For example, if someone else has referred to you one of his clients and you need to pay the referral fees to them, so you need to disclose this matter to the employer, to your clients, and to your prospective clients. It's that simple. Now our last standard is responsibility as a CFA Institute member or candidate. Since you are a member or a candidate in the CFA Institute, you are bound to have certain roles and responsibilities, and you need to fulfill them. The first subsection is your conduct as a participant. You must never do anything that will hamper the reputation of the CFA Institute, that will play with the integrity of the CFA Institute. Like for example, cheating during the exams or violating any law or any particular standard, knowingly. So all these acts, they may lead to the hampering of the reputation of CFA Institute, and you must never do anything that hampers the reputation or integrity of the CFA Institute. The second subsection is the reference to CFA Institute designation or program. Now for example, you have cleared all the levels of CFA, but you have not opted for the CFA membership. So you cannot write your name as Ram Prasad Yadav CFA. You cannot write that way. ABC CFA. You need to write ABC level 3 of CFA cleared. That's all right. Or pending charter holder. That is also okay. But until and unless you have the membership in your hand, you cannot write your name as your name then CFA. Similarly, there are other things in detail in all the standards. I would just like you to make the heading of these standards like I have written and made. Thank you.